Hey, good afternoon, everybody. Welcome along to our first time buyer mortgage advice webinar. I see there's people just filtering in. Good afternoon, everyone. There's people just coming in as I talk. So we're welcome along. Yeah, numbers growing as I speak here, so it's good to see. I'm just going to give people maybe just another minute or two just to come in, if that's okay, and then we'll kick off. Um, so welcome along anyway. Hopefully you get something from today's presentation. We did our switching presentation last week and it went very well. So we'll follow the same format and we'll explain all now in just a minute or two. Welcome to those who've just come in. Okay, people still filtering in. Ryan, you can hear me okay, can you?
I can hear you fine, yeah.
Okay, it's just got a question in. Is my audio was off? Thankfully, it's not. So it must be at your end to the person who asked that question. Okay, you scared me. Nothing worse than technical issues. Okay, we're going to kick off. So my name is Colin Whelan. This is my colleague Ryan Flood. Today we're going to do guys. Sorry, today we're going to do guys is give you an understanding as to I suppose what you need to do to become a first time buyer. Okay, so the objective of us today is to give you an understanding as to what you need to do to get your ducks in a row. I suppose look, to tick all the boxes that you need to tick to allow for you to get your foot on the property ladder. Um, I am a regional manager with the company. I'm just going to be a bit of the MC kind of guy here, ask a few questions. Um, but really, the main guy here is Ryan. Ryan is our technical expert. He's our mortgage person. He's the guy who helps all of our clients, and most of you here will be clients, achieve what they want to achieve from a mortgage perspective. The reason I suppose that, IPF went down this mortgage route, if that makes sense, is because we have to offer our clients the mortgage process, or a mortgage, I suppose, process, or whatever you want to phrase it, as part of their overall financial plan. A lot of our clients will know us from the point of view of that we facilitate ABCs through different public sector bodies, and quite a few of you here today will probably have ABCs through us. Some of you won't, and that's fine as well. And some of you might be from the private sector, and that's fine too. Okay, but the majority of our clients will be public sector workers, and they will have ABCs through ourselves. But it's very important as part of your overall financial plan, your overall package, if you want to put it that way, that we give you access to a mortgage advisor who is au fait with the ins and outs of what it takes to get a public sector worker a mortgage. Simple as that, okay? And that's where Ryan comes in, as I've said already. So look, just to kind of give you a bit of more information on ourselves, we're fully Irish owned brokerage. As things stand, we've over 30,000 clients now, and we manage over 1.25 billion euros worth of funds. Okay, so our clients thankfully trust us with an awful lot of money, and we take that very, very seriously. Okay, you'll see here that we also have a decent trust score, Trustpilot score, rating, whatever you want to put it, and we like to think that that just attests to the level of service we try to give to our clients. Okay, a few things before I hand over to Ryan. We are going to give away a voucher today. So it'll be €100, one for all voucher. And the question will be at the end of the presentation. Presentation will hopefully take maybe 30 to 40 minutes. Just depends on the level of engagement we get through yourselves. I'll talk about that now in a second. Um, but I suppose like the key thing here really is that, if you want to win the voucher, that you stay on till the end, because the question will be at the end and it'll be about the actual subject matter of the presentation. So there'll be something there that Ryan will ask a question on that he will have presented earlier on in the presentation. From the point of view of just engagement, right? Ask, the Q&A box is open, the chat function is open. Ask your questions. The more questions you ask, the better. We will try and answer as many questions as possible. Like we have our slides, we can go through them, obviously, of course, right? But it makes it better if you guys ask your questions, and we'll try and answer as many as possible, as I said. Right, so that's enough waffling out of me. I'll hand over to Ryan. Ryan, over to yourself.
Thanks for that, Colin. First thing I will say is every slide has QR codes in top corner. If at any stage you have anything specific you want to book in to get ahead of the queue, scan that up, input your details, and a call will be arranged next couple of days. Just in terms of the agenda piece. So one of the main points to why to choose a mortgage broker mortgage types and process. So we break down the different types of mortgages and how they work. Documents that you generally need for the mortgage, rules and fees, so the restrictions on what it's going to cost, the mortgage journey itself, a couple of do's and don'ts, and then we'll do the prize draw, which everyone's looking for. And at the very end, we'll go through what happens next. Towards then, what we're going to go through is, as Colin mentioned, we mainly deal in the public sector, but we do offer private sector clients also access to it. So it's the reason why the public sector choose IPF is mainly due to the experience that we have with the current market. We have lender public sector offerings. So some lenders look at public sector a little bit differently just with the way their salary scales work. We have knowledge of lenders' assessment of public sector income, so like your guards, your nurses with the allowances, overtimes, but the same works private sector with bonuses and allowances. And then we access to different lenders with the salary scale. So some generally lend more than others. So we'll go through all of that essentially as part of our consults. As for first-time buyers, just jump on
Can I
to
just jump
this.
in for a second, right? So I'm going to
Yeah.
jump in here with my own question, if that's okay, because I think, like, so look, you've mentioned there that we also deal with private sector workers, and an awful lot of, say, the public sector clientele that we deal with will have spouses in the private sector, so we deal with them as well. Does that make sense, Ryan?
Yeah.
Yeah, very cool. And then the other thing I was going to say for public sector workers, you mentioned there about, like, say, just how can we help them, like, from the point of view of getting, I don't know, a bigger loan or a bigger amount of money for a mortgage for a house or an apartment that they're looking to get? Like, what do we do? If you can just be a bit more detailed there.
So with public sector workers, they're on a salary scale. So their scale might go up next year, the year after, and so on. We're able to utilize that scale at the beginning of the mortgage process. So rather than if you're on 30K a year, next year you're going to be on 32, 34, we can use the higher income at the initial stage because we know you're going to get that salary eventually. So lenders have different restrictions on it. Some will go higher than others. Some will go 2 points, 3 points, sometimes up to 8 points for a joint application with a few boxes ticked, essentially. So it's
Okay.
about understanding how that works, but also on the other side of things, when you have like your guards, your nurses, paramedics, and stuff like that, their incomes are a little bit messier because you'll have different sectors, different departments kind of pulling an income from it. So like your paramedic might be firefighter as well. So all those things pull into it. So we understand how that works and we're able to maximize what they could actually use as an income along with overtimes for like your HSE staff,
So
guards, and so on.
people might be getting allowances for different types of like work that they're doing, etc., like overtimes. There could be nurses on here who maybe are doing like night shifts and different types of maybe duty shifts that actually gives them additional money. Does that make sense?
Yeah, so we're able to utilize as much of that as possible and break it
Okay.
down in terms of how we can maximize that for higher loan amounts, properties, and so on.
Yeah. Okay. Great. Okay. Perfect. Just one question I have in already is which bank offers public civil service? Well, which bank offers mortgages to the public sector, if that makes sense?
All of them essentially.
Okay. Cool.
They some are more beneficial than others. As I said, the
Yeah.
public sector offerings are more beneficial with some lenders, might not be with others, but if you need it as well. So it could be a case
Okay.
that you don't actually need to use your salary scale. So we can go down that route as well.
Cool. And we have access to all the lenders on the market.
We have all main lenders and two non-bank lenders.
Okay. Great.
So full range of options.
Okay. Perfect. Right. That's important. Okay.
Sure. So we'll move on to just what first-time buyer is and what you can kind of get for being a first-time buyer. So the idea behind first-time buyer is that you want to prepare yourself to be in the best possible position to apply. Nobody likes being rejected or nobody likes getting less than what they can get. So ideally, touch base 6 months before you plan on applying. If it's a case that you're looking to buy next month and it's just a spur of the moment thing, we can also go through that as well. But ideally 6 months, because what we can do is we can put a plan in place. We can make you maximize what you need to do, whether it's increase your savings, reduce short-term debt, clean up the accounts, essentially, depending on what your circumstances are. As a first-time buyer, you can go up 4 times your income. So it's a combined salary base lenders will take. And there are cases to go above that 4 times on an exception basis, but it's done on a case by case. Overtime's accepted. I put overtime in there because it's the most common one, but the same thing can be allowed for shift allowance, car allowance, all that sort of stuff does get kind of pulled into it. Some, again, use more than others. With yourselves, as for some buyers, you need a minimum 10% deposit. So that can come from savings, gift, or utilization of a few schemes that are available to you. Of those schemes, you'll have your help to buy. So that's capped at 30,000 to purchase or 10% of whatever you buy for. It's usually the lower of the two. You're doing well to find a house under 3K. Then the second one will be the first home equity scheme. So you sell a portion of the property's equity to the local authority repay them in due course at your own leisure. And then you have the Affordable Home Scheme, which is a number of properties in a certain development being made available at a discount. Again, the discount is held equity with the local authority. So you might own 80% of the house, they own 20%, still your house, but you do have to pay them back in the future. There are cashback offerings then as well. So just kind of another incentive to go with a certain lender over another. And then you have the mix of variable or fixed rates on the market. So you can choose what type of rate applies to you. So it could be a case that you might just want to guarantee what your payments are for a period of time. You might want to overpay at the same time. So we'll go through that. Generally, that's a case by case thing because some people will be looking to do different things with the property.
Okay. Okay, so at the moment then, like there's a number of schemes available that like the government are trying to actually, I suppose, help buyers with, if that makes sense. So we are seeing people come through with those, are we?
Yeah, so Help to Buy and Affordable Home Scheme and First Home Equity Scheme, they're all on new builds. So you're limited
Okay.
in terms of the schemes that you can use. First Home Equity Scheme does allow you to buy a second-hand property, but there's a few restrictions on it where like you have to be renting the property and so on. But again, you can
Okay.
go through them in more detail during the consult, but it's just to know what's available for you.
Yeah, and
So
you can give people a bit of a heads up in regards to whether or not they are suitable for those type of schemes. Would that make sense?
yeah, so like we'll go through the consult, see what the numbers look like, and go through what those schemes would do for that specific proposal. So whether it's
Okay,
Help
good
to Buy,
stuff.
First Home Scheme, or Affordable Homes, but you can mix and match them as well. So you can use two of the schemes together
Hmm.
if you wanted to.
Yeah, okay, cool. Just a few questions coming in, right? So as I
Yep.
said, we're going to rather than present you just like I'm not gonna say bland slides, but we're going to try and do a few questions here as well, if that's okay. So,
Yep.
like one question I have here, Ryan, is like, what is the benefit in using like IPF versus using a high street bank?
So with IPF, we have access to all of them. So whether you go, let's say, directly to one particular lender, you'll get that particular lender's criteria, restrictions, and rates. Come to ourselves, we have access to everyone. So like we can go, yeah, you can get whatever the deal is with that particular lender, but there's a better deal around the corner with another lender. Or they'll allow you to use more of your income. They'll put it over a longer term. They'll be a bit more flexible in overpayments.
Yeah.
So a mortgage is a long-term product. You're not going to clear it in the next couple of years. Hopefully you do, but you want to make sure you're getting the best of it, making the most of it, and not overpaying for simplicity.
Yeah, so basically we've access to the full market is what you're saying, and then because we've access to the full market, we can like firstly get you the best deal, secondly get you the best loan amount, secondly maybe get you the best loan term, if that makes sense. So there's
Yep,
all different aspects to it whereby one bank might suit me, Ryan, but your situation is obviously different to mine, so another bank might suit you. But that's where IPF come in because we can actually see what your situation is
yep,
and actually get a tailored lender for your situation. So
exactly.
that makes sense.
Yeah.
Yeah, cool, cool, cool. Like just another question there as well. So just like somebody said, like I think the question was, can you have more than one mortgage approval in principle when you've applied? I don't know if that makes sense, does it?
Yeah. So like you can have approvals, so you can go directly
Okay.
to each and every bank if you want to.
Okay.
It's a lot of work, it's a lot of paperwork because you're going to do the same thing over and over again, six, seven, eight times. Alternatively, go to a broker. They put the application in with it, whichever lender it is. So let's say if you get your approval in principle, rates change in 6 months, and someone else is more suitable, we can just pull that case and go then to a new lender and have a new approval in
Okay.
place. And again, just making sure it's still the best deal for you. So like even if you get your approval, we can continuously review it to see if you can get a bigger higher loan amount. Is there another lender that's more applicable to your situation?
Okay, cool. Okay, very good. Okay, I'll get back to the slides and we'll come back to some questions. I'll
Yep.
try and like there's a lot of questions coming in, which is great. So I'll try and answer as many as possible as we go along.
Yep. So this is just a quick example. So like a couple starting out, generally quite young, your salaries would be quite low. Other people, salaries might be high. It depends. So if you joint income about six, seven and a half, you qualify for a mortgage 270. In this scenario, you're buying a house for 300K. So your deposit in this case is 10% of your purchase price, 30K. There are fees which I'll go through later. So in essence, you buy a house for 300K, mortgage 270. If you qualify for the maximum for Help to Buy, your full deposit is covered under that 30,000. You cover your fees, and you can also get cash back. So if you're going down the new build route, you're going to have to do a few things to the house, whether it's appliances, flooring, furnishings, all that sort of stuff. So you can avail a cash back then of about 5,400. Again, depending on the land, determine what sort of offers are available. It's
Hmm.
purely just a visual piece.
The cashback is great though, isn't it? Because it can help you like to afford like to like I've used it myself with the cashback, and it helped to furnish my front room when I bought my home. Like so, the cashback piece is really, really worth looking into and being aware of and seeing if it makes sense. In some cases, it might not make sense. It did in my situation though, and that was
Yeah.
because I got good advice. So
So
good advice matters.
so some people use it to pay their mortgage for a couple of months to make it easy when they move in,
Yeah,
pay for
yeah,
furnishings, or get a holiday after a fun mortgage process.
very good.
Again, it's whatever's specific to them. In terms of documents that are needed, so it's fairly straightforward. It's the same for most lenders, but not all. So it'll be like 6 months bank statements, saving statements, a salary cert, which I can provide to you. It's a generic one that covers all lenders. 3 months most recent pay slips. So if you're fortnightly, six, weekly, last 12. Your employee detail summary is important because that's a need. If you're looking to use anything on top of your normal income, so your variable income, so like your overtimes, allowances, bonuses, we need your last three because we just need to show a track record of that. We need proof of address and ID, and then any case specific documents. So you can go down like marriage cert, separation agreement, anything specific to your particular case, which will be broken down during the consult based on your situation. So
Right, now
fairly
this is a
straightforward.
bit, this is the bit, see, you say straightforward, right? But
Yeah.
this is the bit that I'm like, oh God, like, how many documents are they going to ask from me for? You know what I mean? I've got to get accounts for this, account for
Yeah.
that. So like, can you like, I think we have a system in place, don't we, that actually tries to make this a little bit simpler for people? Want to explain that a
It,
little bit?
yeah. So like the system uses an online mortgage application. So it's kind of learning from what you input is the easiest way to say it.
Yeah.
So if you put in that you're self-employed, it'll generate a list of documents that you need as a self-employed person.
Okay.
If you're PAYE, which is 90% of the population, then what you'll do is it'll just ask for a salary cert and pay slips and your employee detail summary. So depending on what your inputs are, it'll generate a specific list for you. So you know exactly what you have to update. So if you say you have a loan, it'll ask for a loan statement. If you don't have a loan, it's not going to ask for one. So it's a smart system. It works based off your inputs. It doesn't tell you exactly which account because it doesn't know what account you hold, but it'll tell you exactly what you need based on what you've input.
Yeah, and then it just ticks off as you go along. It ticks off when you've done what you need to do. It ticks it off for you. So it's a bit of
Yeah,
a checklist for you. So it's a very live system, I'd say, from my own
yeah,
experience using it. And that it's really it really kind of like makes it easy as possible. I think like that's what we're trying to actually get here. Like number one is like when you become like look, number one is getting yourself in the property ladder when you're a first time buyer. You want to get that home, right? You want to get the loan, just get the home sorted. After that, then I suggest is trying to get the rate, to get the best rate so that you're
yeah.
not overpaying on mortgage repayments. But then after that, but then thirdly is convenience, like ease of use. And those are the three boxes that we will, I suppose, from IPF's point of view, that we try to take for all first-time buyers, and even if you're a mover, that also can apply as well. Anything to add to that, Ryan, or does that make sense to you?
No, it's perfect sense. It's more about just look at your options. The more options you have, the easier it is, and
Yeah.
the best you can kind of get from it, rather than kind of singling yourself to one specific thing.
Yeah, very good. Um, I suppose like just a few questions coming in. So I don't know, I'm just going to test your technical knowledge here. But if a couple are going for a mortgage when one is a first time buyer and the other is a second time buyer with a mortgage,
Yeah.
um, what does what's the deposit situation there? What way do you have any understand anything that they should be aware of?
So, to be a first-time buyer, each and
Yeah.
every person on the application has to be a first-time buyer.
Okay. Okay.
So, if there's one person that's a second-time buyer, unfortunately, class as a joint second-time buyer.
Okay.
So again, the deposit limit's the same. It's still 10%. Previously it
Okay.
was
Good.
20. It was changed recently enough in the last few years to where it's only 10% now. So again, the only difference between yourself and a first-time buyer is how much you can borrow. So 3.5 times the second time. And unfortunately,
Yeah.
those schemes that I mentioned previously would, um, if you were to go on your own as a first-time buyer, then you'd class yourself as a first-time buyer.
Okay.
Again,
Okay. Good.
10%.
Yeah. Okay. Good stuff. Are there any difficulties buying as an unmarried couple? This is going to
Um,
happen more and more often now at this stage. I think like that, like I bought my first home. I wasn't married. I made, we
yeah.
bought our first home. We prioritized our monies using that towards, not everyone's different, but I think we're going to see an awful lot more of unmarried couples trying to get on the property ladder. So it's a
Yeah.
very relevant question.
So with that, it's the same as whether you're married or not. The only difference is how the income is calculated. Because if you're married, obviously tax credits are different. If you're single, you're factored. That's the real only difference. You still jointly own the house. You're still joint and severally liable.
It's really just no
It's
difference, really.
much of a muchness, yeah. Now,
Right.
what's
Okay, that's
happening
good.
recently is there's
Yeah.
siblings looking to buy. That's a little bit different
Okay.
because you're restricted in terms of lenders' criteria, but you can still buy wing if you want to. Um, it's similar scenario. You're technically
Yeah.
two boats single.
Just from my side of the house on that, if that makes sense, because I suppose I'm a financial planner, certified financial planner. I wouldn't be a mortgage expert at all, and that's why Ryan is here today. But from a life cover point of view, the non-married couple, you do need to be careful from an inheritance tax point of view. If you're not married and you buy a home together, there is a recommendation around life cover that you need to just that you're better off doing. You don't have to do it, but you just need to be aware of the risk if you don't do it. I won't get into detail on that here, but I suppose if we're looking for
Yeah,
just what a non-married couple, what difficulties could be there if you were buying. That'd be one thing I would point out from a life cover point of view. And you do need life cover. I think you're going to go through this, Ryan, but you do need life cover as part of
yeah,
your mortgage application for your lender. Okay, I'm just going to go
yeah,
back over to Ryan's slides, and we'll come back to some more questions in a moment too, if that's okay.
yeah. So what we're going to go through is just a mortgage journey. So the slides are fairly simplistic, but we'll kind of speak on them. So from an application point of view, it's the online application, details, upload your documents. Once that's done, I'll have a look at it. I'll go through it. At that stage, I'll touch base and say, look, these are your options. I go through it initially on the consult, but that's generally just kind of a rough idea. Once the documents come in, it's then nailed down in terms of numbers, how much you're saving, what properties are available, deposit available, and so on. At that stage, we'll then go get your approval. So the approval is called an approval in principle. So there's a few different types of them. They're all the same thing, essentially. So some are specific to properties, some are specific to loan amounts, or some are valid for 6 to 12 months. They all do the same thing. Most estate agents won't allow you to bid on a property without one. After that, then you go find your house. Once you find your house, then you'll go sale agreed, you'll put your bids in and so on. Once you find a property, then that's when you touch base back with ourselves. We'll start the process to request what's called a loan offer. So that's when your legal contracts kick in for the purchase. In between all of that, you have to have a valuation. Each lender has their own different panel of valuers. So one valuer might work for one lender, but not another. So at that stage, just hold off, touch base, and we'll go through how that works. Once evaluation is done, valuation comes in, we then request your loan offer. The lender reviews the case, reviews the property, because that falls in as part of their assessment, and then they'll issue your loan offer to yourself and your solicitor. Once your offer goes out, then that's when you sign your contracts to buy the house. Once you
Mm.
have that all done, your solicitor then sends in their requisition. So they'll request the funds to complete the purchase, and that's when it goes to the completion stage. Once the funds have issued, solicitor has your money, buys your house, and you pick up your keys, hopefully not too long after. So that's
There's a little bit to it,
very
isn't there?
simplified. There's a
Mm.
little bit to it, but there's very few touch points as it. So once you get your approval, it's basically go find a house essentially.
Yeah,
So
yeah.
you might have one in mind, you might be looking at new builds. They all have their own unique processes, whether you're buying new builds secondhand or even building your own. So this is
Okay.
very simplified in that. But if you go from application to approval, get your valuation, get your offer, and complete it, essentially is the easiest way to put it.
I think it's key to say, right, that like as part every step on that journey, you're there to help and guide the
Yeah.
client through that. Any questions or queries that come up as well, you also have someone who helps you out from an administration perspective that is also there. And we have different processes and procedures in place to make sure that the client has the best journey, for want of a better phrase. Oh, sure, it says mortgage journey. Yeah, yeah, has the best journey. So like, so yeah, so there's a little bit to it, and the patience is required. And I think you need to be in. Ryan, when would you say a person needs to be in touch with you if they're looking to get on the property ladder? Like how many months before they want to buy?
Whenever they want to buy, ideally 6 months before. But they can always call because a lot of people nowadays, especially with the value of rents, a lot of people would actually be mortgage ready now without knowing because the Chinese whisper is that you have to save for 6 months. It's not always the case. If you're renting significantly high amounts and your mortgage is going to be quite low, that can cover you off as well, depending. So it's one of those like pick up the phone and ask the question because I always go by if you don't ask, you don't get. So
Yeah.
ask the question. You'll either, yeah, you're ready now, or what we do is we put a plan in place to where you are mortgage ready in 6 months. And
Okay.
at that stage, you'll understand the journey, you'll understand how it works. During each of those steps as well, like my phone number is available. You can pick up the phone at any stage,
Yeah.
say, look, I have a few
Yeah.
questions on this, queries on that, or I've been looking at proposals. What do you think? It won't be ideal in terms of what type of house to buy because you're the one who's going to live there, but I can help where I can. So that's
Yeah.
the
Okay.
benefit then of ourselves.
Okay, great. How long do you need to be in a permanent position before you can like apply for a mortgage?
So most lenders have minimum employment period. It doesn't have to actually be with one employer. So like even if you're on probation, you can still apply for a mortgage.
Okay.
Ideally, if you don't have a house found. The reason I say that is they'll add what's called a condition to your approval. So they'll say we'll approve you for a certain amount if you give us X, Y, and Z. One of those would be confirmation your employment is now permanent. So probation's been completed. Public sector is usually about 12 months. We have a bit of swing where we can ask to have that waived. It's down to the lender. Some lenders do waive it immediately, some lenders don't, but that's where it falls into picking the right lender for you.
Yeah, yeah, good point.
So that comes into it as well. But if you've been in continuous employment or you're just out of college and in your first employment, usually it's about 12 months minimum employment history, ideally 3 years would be the scenario. And then there's obviously the wiggle room in between, depending on what you're doing. If, let's say, you were a doctor, you went self-employed then as a GP or anything like that, we have a bit of wiggle room then as well in terms of how your employment has looked as well, because you'd be going from employed to self-employed.
Okay. So everyone's situation is a little bit different, but rule of thumb is what you mentioned there at the start, about 12
Yeah,
months or so. Yeah, okay, cool.
12 months plus,
Yeah.
ideally, yeah.
So like one of the questions we had there was like I've been abroad for the last 2 years. Or sorry, I've been abroad and I've been home for 2 years, or I've been here for two
Yeah,
years. So that 12 months will come into it. Then
yeah,
another person mentioned about their bank accounts. So like since having clean bank accounts for the last 6 months,
yeah.
don't know, so just our good bank accounts. That makes
It,
sense. You go back six
it'd be
months and
well
then there's
managed. It'd be well managed. So, like, don't be having missed payments in your account. Don't
yeah,
be
okay.
using your overdraft excessively. And what I mean by
Yeah.
that is going over your limit. Your overdraft, if you use it within the limit, then that's fine. It's a credit facility. You're allowed to use it. Same with a credit card, same with a loan. It's more stressing your account. So, like, missed payments consistently throughout the account, stuff like that. That's generally what I mean by kind of clean accounts. But as I said, like everyone's accounts are managed by themselves. They understand how it works. If it's easy to read and understand, then it's easy to get the approval.
Okay, cool. Okay, I'm gonna move on next slides. I'll keep on
Yep,
answering questions. I'll keep on asking you questions as we go along. So please keep the questions coming in. I appreciate the engagement.
yep.
Okay. The not so nice part, fees
So
involved. Okay.
fees are in everyday life, whether you're paying for your car to get serviced or whether you're buying a house. It's the same thing. So the fees are non-negotiable. Unfortunately, they're set in stone for the most part. So like your valuation fee will be between 150 and 200, depending on the lender. You'll know exactly what the valuation's costing. As I said, it's a bit different when it comes to a new build because you'll need two of those. One at the
Okay.
initial stage and one when the property is actually completed. If you're looking at legal fees, you're probably looking between 1,800, 2.5. Could be higher, could be lower. It just depends really where you go. They all do the same thing, but it is quite important at the latter stages of the application because that's
Mm.
when there'll be deadlines put in place and you want to make sure you can meet them. The next thing
Yeah.
then
Okay.
that would be your stamp duty. So stamp duty for most people is 1%. The only time stamp duty changes is if you go above the million percent, over €1 million in terms of purchase price. Great problem to have. But it would
Mm.
increase between 2% onwards and then 6% over 1.5. Your structural survey. So this isn't mandatory, but it's highly, highly recommended. Just because if you're buying a secondhand property, it's a little bit older, you want to make sure it's structurally sound. You don't want to buy a house and then in 3 years' time something breaks and you're spending 10, 20, 30,000 to fix it. Whereas you could have found out initially at the initial phase, and then it means you're not buying something that's going to cost you money in the future.
Mm.
It's not cheap,
Or
but
you're
again,
negotiating the price down if you find something, but you still like the property. But if you find something, you can go back and negotiate the price
you can
down
try and
with the seller.
negotiate based. Yeah, exactly.
Yeah.
So like if you're buying something as it's seen, if you know there's something wrong with it, it's going to cost money. You might be able to knock that off the actual asking
I've
price.
seen that
But
happen
again,
before now, I must say. I've seen that before. So it is
mm,
that structural survey is a must. Absolutely. You're going to make one of the biggest purchases of your life. That outlay on a structural survey is a no-brainer,
yeah,
in my opinion, for what it's worth.
yeah. And it would be in relation to whoever buys a house because you're not buying something for two, three, 400,000 quite often.
Yeah.
And
Okay.
then for five, €800 can save you tens of thousands in the future. Any other fees will be confirmed at the application stage. So the reason I put this in is that, as I said, the valuation fee could be doubled because you're buying a new build. Additional costs, so the survey might bring up a damp report, asbestos report, all those little things. So I'll be able to confirm all of that at the initial stage or when you do find a house. So I'll be able to kind of break it down. In terms of fees with ourselves, then that'll be confirmed then at the application stage as well. So not too much involved fees wise, thankfully.
We like our fees though, just to be touch upon that, like so like our fees are not high, if that makes sense. Like for a first time buyer, roughly what
For
we're looking at.
first time buyer, it's €100 for the application. So the whole point
Okay.
is that we want to be able to kind of help you. So it's just kind of
Okay.
covering the cost of what it is to submit, I suppose. Keep
Yeah. So it costs just to cover our outlay from an administration point of view and the systems use as well. So it's
yeah,
not that's not a profit making exercise in that point from that perspective. So
no,
I think
but
very reasonable in that regard.
yeah, exactly. In
Okay.
terms of the mortgage piece, then there are other requirements as well. So, like as Colin went earlier, life cover, it's mandatory. You don't have much of a choice in it. If you
Yeah.
can't, for whatever reason, you can't get mortgage protection, we can obviously discuss that in terms of options around it. But what it is essentially life cover for either if one or both were to pass away, mortgage gets cleared, property is then debt free. The second one then is home insurance. So this only applies for houses, doesn't apply for apartments, just because you're covered a little bit differently there. So if you do buy a house, home insurance is mandatory. So you have to factor that into your budget then as well. Thirdly, then the contents insurance. So it's not mandatory because you just need the house insured, but again, your belongings are worth something to you. Make sure covered. It's not that expensive either, as far as I'm aware. And then finally, the income protection piece. So, like your mortgage is going to be your biggest expense. I think, Colin, you'd know more, you'd deal more in this than I would.
Yeah, like I think income protection is very important. Your biggest asset is your income. And without your biggest asset, i.e. your income, it's very hard to pay for your other biggest asset, which is your property, your mortgage. So it's something that we strongly recommend to anybody who's applying for a mortgage to consider protecting a portion of their income. No, you don't have to protect all of it. Protect a portion of it that you need. Okay, should worse come to worse, you're unable to work. The beauty of income protection, I suppose, just like pensions, is that there's tax relief available. So the government are saying to us, about pensions that they want you to be self-sufficient in retirement, so they're willing to give you some tax relief on your pension premium. And the same applies for income protection. The government do not want you to be reliant on the state if you're sick or ill. So they're actually saying to you, well, look, we'll cover a portion of your premium for protecting your income. So there's a few things that you get the tax relief on. Not many things, but a few things, and those are two of the things that you can get some tax relief on. So the government really are trying to incentivize people to look at protecting a portion of their income, and it makes perfect sense. It's your biggest asset. It pays for everything. It's a no-brainer. But it's not for everybody, and everyone's different and have their own views on it, so that's fine as well. But just it is something we would recommend.
Yep. So a couple of tips, essentially, do's and don'ts on your mortgage. So it's pay all your bills on time. Everybody does it, but it can happen where your car insurance might come out one month and it's quite expensive, especially if you're kind of young, where it can be, and you might pay it without realizing there's direct debit due the next day. If there's one or two and there's a rationale behind it, then we can get around it. But ideally, no missed direct debits. Set your budget. So what that'll do is it'll just let you know what you can save, and you can save a consistent amount each month, and then reduce your credit. So it's not mandatory, but overdraft credit cards, if you can, reduce them down because it's less of an interest cost for you. Also increases the capability on the mortgage piece. Not always required, but again, recommended. In terms of don'ts, is dip into your savings. So I don't mean occasionally take money out to pay for holiday, again, car insurance, home insurance, whatever. Change jobs if possible, because again, the probation piece comes back into it. And then gambling showing on your accounts. So the occasional one here and there isn't a killer, but if you have a consistent trend on gambling, it sets a bad message to the lender that just adds additional risk to your case. So, like a mortgage application, essentially a large risk assessment, you want to mitigate that risk as much as possible. Again, that's where we'd come in 6 months beforehand to kind of help you kind of put a plan in place if needs be.
Okay. So just a few questions. Okay, we're gonna skip to a few questions. There's quite
Yep.
a load of questions coming in. So there's no first-time buyers incentives for second-hand homes. I don't think there is, isn't there not?
No, it's
No.
only first time buyers,
Okay.
unless so you can requalify as a first time buyer. But the
Yeah.
criteria around is like if you bought it as a couple, separate for one reason or another, and you're going now buying a house on your own and you've given up your interest in the initial one, then you can be reclassed as a first time buyer. If you've gone through divorce, separation, stuff like that, same setup, bought it together. separate. You can reclassify yourself as a first-time buyer, and then
Okay.
obviously bankruptcy and stuff like that. A number of years ago, you can reclass yourself as a first-time buyer. But again,
Okay, well, that's
if you're in
interesting.
that
Okay, so
case, yeah,
that's where your technical knowledge comes into play there, really, isn't it? Like,
yeah. So I can understand, like, I'll be able to kind of, you can use the incentives again to help because if you bought previously
yeah, it's
together,
big.
it's
Hmm.
not easy to get back onto the property ladder.
Yeah, okay, cool. Like, one here is a structural survey recommended for a new build. I have a new build. I got a structural survey just to be sure. Would you recommend, Ryan, or was I going over the top?
Um, it depends really on where you're buying it. Like if you're buying a new build, the property should be built correctly. You'll have
Yeah.
a 10-year bond essentially on it, so it's like a guarantee as well.
Okay.
So you can do it. It's, as I said, peace of mind is priceless at the best
Yeah.
of times. So for the sake of 800 euro, like much was yours in the end.
Yeah, it's about that, yeah.
Yeah. So
I don't
for the sake
remember.
of that, you have certainty in the house. You don't need to worry about it. And you can make it properly. I know you have your snag along the way, but again,
Yeah.
stuff can happen on a new build.
Mm, mm. Okay, cool. So a snag's a must anyway, but that's definitely getting a snaggery, and I did
Yeah.
that as well. So, okay, do you have a joint bank account for getting the more? Do you have to have a joint bank account? No, you don't. You don't
No.
have to have a joint bank account. No. There's an awful lot of joint questions coming in here, so I'm kind of mindful like that there might be people who are not buying with another person. So, from a single person's point of view, Ryan, is there? I'm trying to find some questions in relation to that. But is there anything you would give advice on from a single person's point of view?
So I can see there's a question there about like Solwire is a two-time salary. No. It'd be four times your salary each person. So they're on
Yeah.
10,000, they're on 10,000, it'd be 20 combined. Whereas if you're on your own 10, it'd be four times that.
Okay.
So you can benefit of those. If you inherited a property, so it's an interesting one because it's kind of, am I still a first-time buyer? Technically, yes, because first-time buyer qualifies as you've never borrowed to purchase the property. So again, it depends on the circumstances in which you got the property.
Mm,
Um, there's another one there in relation to like if you dip back into your savings. Generally, banks will take a 6 month average. Some banks want more consistency than others. Again, that falls under the unique scenario of your particular circumstances. If you're taking more out than what you're saving, then it's a little bit different. Whereas if you're saving a certain amount and taking money out, maybe it's a sign that you just reduce your savings a little bit and have them consistent. Because when you have your mortgage, you're not going to have that benefit sometimes.
okay, cool. So if you learn about loans and stuff like that as well, like so, um, any advice on people who have existing loans or maybe thinking about buying a new car and taking out some
Yeah.
sort of finance agreement?
Um, we can go through that on the initial consult. So I can
Okay.
go through your current circumstances and I can say if you're to get a loan or a hire purchase for 300 quid a month, how will that impact your case? Sometimes it will, sometimes it won't. But any additional credit, let's say you get your approval, any
Mm,
credit afterwards can impact it. So, like, do you want to lose a house for the sake of getting a credit card or upgrading your car, not waiting a couple of months until the house goes through? All those little things would have to be kind of factored in because once you get your mortgage, you don't get assessed for a mortgage until you apply for another one.
okay. Okay. I'm just mindful of time here.
Yeah,
So I said 35, well, I said 30, 40 minutes maybe as well. It's been so much engagement. Really appreciate all the questions through, and we're trying to answer as best possibly can. Some of them are quite technical questions, so they probably
yeah.
would just require you to have a chat with Ryan about your situation. And that's what the QR code is for in the corner of this slide that's on display. But we're going to go and do the quiz. Now, look, for the quiz, right, before I even ask the question, right, I want to make it very clear. Do not use the Q&A function. Use the chat function for your answer. Okay? It'll be fastest finger first, right? So I'm going to put the question. The question is going to come through in the next slide. Fastest finger first in the chat function is going to win the prize. Okay? So everyone ready? I hope so. Ryan, you're not now play. Just to make you aware of that. Okay, here comes the question.
So what is the current rate of stamp duty for properties up to 1 million euro?
Okay, let's see what we have coming through. Answers are flying in.
Everyone was ready.
Okay. Now I'm trying to scroll to the top. I'm struggling. Okay, Matthew Moore, your fastest finger first. Well done, Matthew Moore. You've won yourself a €100 one for all voucher. Um, okay, good stuff. Okay, so I'll just go back into the slide deck. Don't think there's many more
Yeah.
slides to go, Ryan, is it?
No, that's it. We
That's it.
always
That's
finish
it.
on a high. try and give something to someone.
Yeah, so there we go.
So
There's the
as
answer,
I say,
guys. So well done.
answer
Well done.
1%. In terms of what happens next then, scan the QR codes. Those will be the boxes that kind of populate on it. They do have a red mark on it, so just pop your details in there.
Hmm.
Any questions you want to do, so if your case is unique, pop it in the little message box. That comes through to me. Touch base usually takes a day or two to just get through them. Obviously, with the webinar, it'll be higher volumes. So just bear with me on that. But my contact details are available on the website as well. So if you want to initiate the contact, by all means, jump online. You can grab my contact details and you'll be able to get through to ourselves in the mortgage department.
Okay, cool.
Any
You
other
want to answer any
questions
more
you're coming up
questions
to,
before we
or
go? Do you want to take a look at the chat box? Anything stand out to you?
just having a look here? Um, so a lot of them kind of cover off each other. So like I moved
Yeah.
back in Canada just over 2 years ago. Impact on the application process. This is the same for anybody that's kind of new to Ireland as well. So if you come to Ireland and you've lived abroad, they'll want a credit check from that country. So they want to make sure there's no outstanding debts or anything like that. So keep that in mind and have a look at the process for that. So if you move to Ireland, um, just apply for a credit check previously, send it through, and that'll form part of the application piece. But provided you're working in Ireland, if you're returning, like an expat returning, oh, it happens a lot with nurses, even in the UK, like up Northern Ireland, still technically classed as the same. So just provide confirmation that you're returning to your same role. Probation might be an issue if it's 6 months and so on. But provided there's 12 months there, you're covered.
Okay. Good stuff. I
Um,
mean, there's so many questions coming in. I think we're gonna have to call a halt out there. It's like 13:41. We said 30, 40, 35 to 40 minutes. So, look, appreciate everyone like getting on board and getting engaged, etc., etc. We're going to try and do these webinars once every quarter, so you will probably get a notification again. But if you do want to talk to Ryan, as Ryan said, just fill out the questionnaire attached to the QR code, and we'll be in touch. There's quite a lot of people who are already filtering through, so just bear with us from a time point of view. But Ryan will be in touch at some point to try and help you as best he possibly can. So look, hope that helped
yeah,
today. Thanks for everyone's engagement. Hope to see you all soon. Please God, look after
yeah.
yourselves.